Florida's housing market, once the heartbeat of the state's economy, is starting to shake again. But this time, it's not because of hurricanes or rising interest rates. It's because of something many thought couldn't touch real estate directly: a federal government shutdown. And the ripple effects? They're spreading faster than most experts expected. From home insurance to new construction and even federal loan approvals, Florida is turning into a warning sign for the rest of America. Welcome to Global Housing Truths. Today, we uncover how this government shutdown is quietly freezing one of the strongest real estate markets in the country, and what it means for you. Whenever we talk about Florida real estate, there's always a story. First, the pandemic boom, homes flying off the market. Then, a cooling phase. And now, just as things were stabilizing, we're hit with this, a shutdown that's striking at the heart of the market. You see, in Florida, housing isn't just part of the economy, it is the economy. Real estate makes up 24% of the state's GDP, far higher than the national average of 18%. That means every home sold, every deal delayed, and every insurance lapse hits Florida harder than almost anywhere else. Realtor.com senior economist, Anthony Smith, even warns that a slowdown here could echo nationwide. In short, what happens in Florida doesn't stay in Florida. Let's start with the biggest immediate problem, flood insurance. Florida has nearly 1.8 million active flood insurance policies, more than a third of all in the United States. But here's the catch: when the government shuts down, the National Flood Insurance Program can't renew or process new policies. Roughly 150,000 policies expire every month in Florida. That means tens of thousands of homeowners, especially in flood-prone areas, are now exposed, uninsured, and anxious. And if a hurricane were to hit during this gap? The financial chaos would be catastrophic. Then there's the construction industry, the engine behind Florida's housing growth. Builders like Pulte Group and KB Homes were just starting to regain confidence after years of material shortages and price volatility. New orders were finally climbing again. Until now. The shutdown means federal permits, especially those tied to environmental regulations, are on hold. With nearly 90% of EPA staff furloughed, new housing projects can't get critical approvals to break ground. Florida already needs over 100,000 new homes just to meet demand. Nationwide, that shortage is close to 4 million units. Every delay in construction pushes prices up, and pushes affordability further out of reach. Next comes financing, the lifeline for thousands of buyers. Federal loans like FHA and USDA are now either delayed or frozen. That means first-time buyers, rural families, and lower-income applicants are stuck mid-process, waiting for approvals that may not come anytime soon. Just to put this in perspective, in June alone, FHA loans in Florida totaled over $2.4 billion, the third highest in the entire nation. With that flow of money cut off, countless home closings are now collapsing at the last minute. The damage isn't just financial, it's psychological. Confidence is everything in real estate. When buyers hesitate, sellers freeze, and builders pause, momentum dies. And when momentum dies, prices and activity follow. Every day this shutdown continues, the uncertainty grows. Florida is essentially becoming a live experiment in how fragile our housing system really is. If the shutdown ends soon, the market might recover quickly, just a temporary bruise. But if it drags on, we could see widespread price drops, stalled developments, and a new wave of inventory sitting unsold. Experts are watching Florida closely because its outcome could predict what happens across America in the months ahead. Housing represents nearly 1/5 of the U.S. economy, so even a small shock can echo far beyond real estate. But not all hope is lost. Periods like this often separate panic from opportunity. Smart investors are already positioning themselves for stability, focusing on properties with long-term rental potential, cash flow certainty, and insured value outside flood zones. Because when the noise fades and the market stabilizes, those who stayed disciplined usually come out ahead. Florida's housing market has survived booms, busts, and hurricanes, but this test is different. It's not about nature. It's about trust. How we navigate this shutdown will show just how resilient our housing system really is. This is Global Housing Truths. If you found this breakdown helpful, make sure to like, subscribe, and stay tuned because the housing story is far from over.